Today we're going to talk about IRS tax audits. What should you expect? How far can things go? And how should you defend your rights? Well, let's start with the basics. An IRS audit does not automatically mean that you did something wrong. But once the IRS selects your return for audit, the scope can quickly expand across additional tax years, across related entities, and in high-risk cases, that's where you should be hiring me, into civil fraud or even criminal tax exposure. Today, I'll explain what an IRS audit really is all about, how far back it can go in time, and how to protect your rights. Hi, I'm David W. Klasing. I'm a dual-licensed tax attorney and CPA, and I'm the owner of the tax law offices of David W. Klasing. To date, we have 24 offices in 11 states. For nearly 30 years now, I've helped taxpayers defend IRS audits, civil fraud cases, and on occasion, criminal tax investigations. Understanding the audit process early can significantly improve the outcome of your audit. To date, I have never had a client criminally prosecuted as a result of an audit that we represented them in. So what is an IRS audit? An IRS audit is the federal government's review of your books, your records, and your financial activity. They're doing that to determine whether the return you filed was correct. Selection for audit does not automatically mean the IRS or even your state believes you committed fraud. Returns are selected through computer screening, statistical analysis, oftentimes because of related examinations involving business partners or investors. The IRS ordinarily starts off an audit by mail, okay? Not by phone. If you get a phone call, it's probably fraud. They send you a notice that identifies the tax years involved, the issues under review, the three most common, and the documents requested. Audits generally take one of three forms, either a correspondence audit, an office audit, or a field audit. Understanding which type of audit you're facing is critical in building the right response. So what can the IRS request in an audit? Generally, the IRS is going to request the documents that were used to prepare the tax return at issue. They're going to want to see bank statements, receipts, accounting records, and supporting schedules. One thing that's critical here is the IRS expects you to present the existing records supporting that return, not records created after the fact, where you're trying to rebuild, alter, or clean up documentation. If you get caught doing that, it can create serious credibility problems. So how far back can the IRS go? Admittedly, most audits involve the last 2, maybe 3 tax years. But if the IRS identifies a substantial error, it may expand the examination. In some cases, if they find a 25% understatement in net income, the IRS can go back 6 years. And most importantly, if the government believes a fraudulent return was filed, there is no statute of limitations in getting that return. This means that criminal tax exposure can effectively remain open indefinitely, depending on your actions. So, statute extensions and strategy. During an audit, the IRS may ask you to extend the statute of limitations. This gives the government more time to investigate. Sometimes a limited extension can be strategic. Other times, refusing an extension outright may force the IRS to narrow the case or issue a notice of deficiency prematurely. This usually works against the taxpayer. Anyways, the decision whether to extend or not should be made strategically and carefully. So what happens if at the end of the audit you flat out disagree with the government? They got the facts wrong, they got the law wrong. If you disagree with the auditor's findings, you may request review of the audit with the Independent Office of Appeals. If the dispute remains unresolved after that meeting, the IRS may issue a notice of deficiency. This creates a strict 90-day deadline to petition the U.S. tax court. Missing this deadline will exponentially reduce your options going forward. So when do audits become dangerous? That's when you think about hiring me or my firm. The most serious audits are those involving false documents, concealed income, fabricated deductions, or inconsistent explanations. IRS auditors are trained to identify what we call in the profession as badges of fraud. And once firm indications of fraud appear in your fact pattern, the audit can silently shift between civil fraud penalties at best or criminal tax referral and prosecution at worst. So in closing, if you've received an IRS audit notice, early strategy matters. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help taxpayers defend audits, protect appeal rights, and reduce civil and criminal tax exposure. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential, reduced rate initial consultation today. You won't regret it.